Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book one free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday. Happy Friday. Good morning, everyone. Before we get into Dolly Varden and Contango, or a merger that quite frankly caught me off guard and by surprise, let's zoom out a little bit because I haven't ranted for a little bit here and talk about the first 12 days of December and just the overall metals market with a major focus on precious metals, gold and silver, and copper. Let's start with gold. It hasn't just been strong, it's been resilient. And we had a bit of fears, a couple of weeks ago, 2 months ago, people thought, ooh, it dropped below 4,000. Are we in trouble? No, there's nothing, once again, macro, long-term focus that illustrates anything on the direction as far as we can see from our perspective. There is a structural shift that is happening on all fronts. Part of it, the recognition of easing rates, which is a story one can go down with ease, whether you're looking at hedging world currency risk, geopolitical disorder. I mean, there's pick your crisis right now, and whether or not you like it, dislike it, your opinion on it is that there's turmoil, and that's a great starting point and easy fundamental point for people to understand the draw and demand for gold and silver as the second string kind of precious metals go to, which we've argued about. It isn't. It's actually quite a superpower on its own. But we see enough out there, regardless of, once again, great, strong economic news from the U.S. There's the overhanging and looming AI data center issues that people are concerned about as well. It still means there's a lot of uncertainty. But what seems to be very clear, and we talked with Chris Marcus about it before we jump into silver, was that QE is likely, now we're using probabilities here, likely to start really flowing in 2026. That certainly could happen. And that, is going to remind everyone very quickly of money printing, just money flowing. And we're going to have to watch that like a hawk, because there's lots of good things and there's lots of concerning things. And, when we look at, the bigger narratives of a decline in the US dollar and the hegemony and all that, sure. But at the same time, there's a very strong resurgence of the US economy, as well as patriotism, as well as national defense and armament, and reclaiming a desire to be a world leader instead of kind of sitting back and going, well, maybe we shouldn't. Now that's a more of an ideological push, but that's there. And there is certainly a bigger overreaching theme that is being voiced for a long time, but it's getting now mainstream traction in this kind of the West requiring and needing critical metals. How are we going to get it? Energy, regardless. Take out the AI data center, which is energy extremes that are huge. We need to have access to critical metals for all the reasons we've talked about for years. So silver, though, has been far more interesting. It spiked early, then it cooled off, and now in this electrifying world and literally copper electrifying the world, it snapped right back into explosion, really, as people really acknowledge the need, the supply deficits. And there's you can listen to Chris Marcus, Peter Kraut. There's great people that focus solely on silver. I always encourage people to go, if you want the nuance and details, Dave Morgan, Chris Marcus and Peter Kraut. I'm sure there's more, but right there's three fantastic. If you want all the details, Andrew Jensen as well. But we look at it more of a macro scale. We've seen this for years. We've been talking about it for 8 years, and we don't trade it. So that, it's not our focus. We don't sit and just watch it every day, but it's great to have access to those people, to interview them. What we do is we focus more on the drill sheet, and we focus more on where the asymmetric gain is on this. Having a strong foundation and having metals in your portfolio, you should talk to your advisor. But these commodities, they've enticed us for years because it is that foundation. And if you don't have a strong foundation, not only like in your own health or fitness or in your family or how you view the world, it'll fall apart. It'll be a house of cards. And your economic well-being, that house has to be in order as well. And when you've got competing narratives, never mind reality as well. A lot of money printing, a lot of debt, a lot of issues, real issues, some conflated, some not. People are going to look for that foundation. And that's where it's been fantastic in a way, because you can see from where we start talking about gold or silver, that chart has gone up. The spike in silver, one gets a little bit more worried about and should pay a bit more attention to. And I don't mean worried in a bad way, but because it was such a dramatic jump up to over 60. And it deserves attention. Now, once again, we don't trade it, so it's not our concern. But what we do love is how it affects silver companies, production, the juniors. And overall, we see that gold is anchoring. We see that silver is tightening in supply, and copper is under structural bid. And all this matters. And before we jump into the nitty gritty about Dolly Varden and I'll just say, make the conclusion right at the beginning, a great deal, a fantastic deal when you look through the nuance. We've got Doug Silver on next week, and that's going to be, as always, a fantastic conversation. He's got a lot of data to go through with us. So check us out on Tuesday. We'll remind people as well. But let's just jump into the merger. So I did check the reactions online, and this is a great real-time case example of what can happen, because the initial response from some is, what the heck? Why would you accept a deal that's below market value? Isn't that just capitulation? Aren't you just rolling over and getting, outsmarted and outplayed? Why would you just hand over when silver is running through? And fair enough. Like on the surface, you'd go, why would you take a 6 to 7% discount on a deal? And we'll get into those details. And that's fair. But let's dig into more of the nuance. And from a retail perspective of why would I take that? Because I was hoping maybe to get a 20% premium or a 50% premium. Look what some of the other deals in the past, which we'll jump into. Why aren't we getting that premium? And it's important to look at, we're not in the same market anymore, and the logistics of it, and why, once again, overall, I think that Sean over Dolly Varden has done a fantastic job explaining their position. But before we get into that position and what my opinion is, let's just remind people of what's on the table here. So Dolly Varden shareholders will get 0.1652 shares of Contango, or for each Dolly Varden share. So that is a 7 to 8% discount on that timestamp as of yesterday. So on the surface, once again, looks terrible. You go, that's not great. Why would I take that? Here's the key. The nominal discount today is likely, probabilistically, I'm using assumptions, not going to reflect the superior value creation path tomorrow. And really, at the end of the day, that's what we're looking at. And we're going to tie into that why you have to take another layer apart and go, another raise was likely going to have to happen. A substantial raise. We look at some of the great companies up there around the same kind of region, Golden Triangle and adjacent, whether you're Snowline, Sitka, Goliath, starting to do bigger raises, much bigger. And that brings in a lot more dilution. Even when you think of creative ways to add the money in, it still does. And you've got all those companies to a certain level is you start rolling the dice a bit more. How much bigger can I grow this? And every CEO has to look and go, where am I at? What's the risk reward? Now, once again, I don't want to give anything away, but at the surface, optics look strange, and it seems like it's a discount takeover. I actually disagree with that. It isn't. That's the case. It matters that it's all stock because everybody's getting the future upside as well. What it's reflecting, and I would argue management agrees, is that no one's being bought out. This is a merger of two companies to rely on each other's strengths and to give people real access to key things that they might be missing. Whereas I would look at Dolly Varden, and say their board is saying we want exposure to a combined engine. We don't want cash today. We want the cash flow. We want someone who's producing, who's a neighbor nearby in Alaska, who's got gold. And if we're Dolly Varden, we're majorly silver. That makes a difference too, because we're sitting in BC. A silver mine has industrial solar panel applications, critical metal, that would arguably, and you can take offense to me or take a shot at me, have a better chance, if you're silver or copper, to be permitted, to be built, and to move forward in the likes of BC, with the likes of the BC government and narrative they've got there. Because that can be, quote unquote, sold to the people. It can be sold to the feds a lot easier than a gold story. Now, once again, you can take offense. You can not like that. Just an opinion. I just kind of look at it as a macro and think that makes sense. So if you've got a producing gold company in Alaska who looks and goes, you know what? I think if we combined our efforts, there might be a good chance of then having the silver association nearby pulling out a lot of silver as well as gold. But so this is more of a true merger and transformation of two platforms together to create further asymmetric gain. So it's not that, hey, I got my asymmetric payoff, XYZ bought us, Barrick bought us, Newmont bought us for a huge premium, or Kinross picks us up, as we'd say, a Great Bear, and we get our payout and we're happy. This is saying we want this to continue. There's a story to go on, and our best bet to minimize risk is for us to look for a cash flow producing company that can be a merger of equals, where we're not giving up too much, where our shareholders still has, but we get the funding we need. We also put ourselves into another realm or access to institutional capital that we may not have been before, and certainly better, stronger deal making. So this isn't a traditional sense of we got a buyout and I've made all my money, I'm done. I look at this as being, we've analyzed this thing. We've looked at our models, at our future models. We looked at the macro market and metals. We looked at the ability to permit and get a mine done. And the solo path looked like it had a bit too much risk. And to me, I look at that as being exceptional risk management. I don't look at it as being capitulation. I look at it as being a very smart move ahead to be able to come together with another team. And, if we look at the Kitsault Valley, would it be strange to think that if Dolly Varden wanted to go alone, that it would be like a $30 to $50 million raise? That's a large drilling program, like a further one, a lot more de-risking, a lot more time in a very volatile market as well. It's a great market, but further time and further dilution. And what's the risk? Well, here's the risk. Say you find more of the same. Well, that's great. Maybe not great for retail shareholders, and maybe not great for the stock. You find more of the same. You spent $50 million to kind of show out and prove out more of the same. There's a probability that could have happened if you go it alone. That's an expensive roll of the dice. Is there a chance that you further de-risked it? Sure, you could have further de-risked it to attract someone. Well, what price would they have given you? Say they give you, well, they would have given you a 10% premium. Well, was waiting a year worth that? And was the dilution for that 10%? You're probably better off taking the deal right today. Would there have been any change as far as the overall exploration story or whatnot? Given a 50 million raise and a year timeline, yeah, you know what? You gotta think of that. So, in a way, you kind of look at it, you're coming up to a potential wall in a good way. And this is where it's a great situation. In fact, we're getting great numbers. We're building the resource. Are we going to dramatically build it out so that we get a massive premium? And if we think that that's possible still, what's the best way to get money into this at a large scale? And this is where I see that, more of the same isn't enough. More consistency is enough. Defining, it's not enough. That dilution and time becomes a silent killer to some extent. And that's not a good thing, especially in junior markets. So right now I see that silver explorers are being watched intently, and they should be. Gold has had its day, and people should be paying attention because of its obvious, debt and financial stability and economic stability for nations. Once again, we talk about it to no end. Lots of people talk about the importance of gold, even though it still really isn't hitting a retail, mom pa that often, that much. We wish it would. And not just because I'd like a bit more active market, but because they would have protected themselves in the last 8 years. You don't have to look at a chart of gold or silver in the last 8 years and know beyond all narratives, there's your answer as to what's happening in the economy. So as far as when we look at the drill sheet, and we'll pull up a drill sheet from 2 months ago that we did on Dolly Varden here. And I think we gave it a score of 80 back in October 1st, which is exceptional. And we really liked what was happening with it. And there we go. Quite a bit of detail we had. We were impressed with what they're doing. Since then, that score has gone up, believe me, and we'll have it in for our subscribers so they can see as of last week what we had it score at. But what's more interesting is, did we think it was fairly valued? And we'll leave that, for a further discussion for our subscribers. But what's interesting about the deal here is that taking in $40 million, once again, it really matters. You're at a point here where there's companies in the past where if you go take it alone, you go, listen, I think we can go take it one more step, where it hasn't worked out. And we see that in a number of ones here. Let me find some notes here. Here we go. There's been, and they've been good success stories today and even in the past, but even at one point, Bruce Jack, Pretium, at one point, they said, we're going to go it alone. This is the most famous modern example of that. And, it was obviously the most hyped story out there in Canada, and high grade, incredibly high grade, 1 ounce per ton hits, made headlines, huge discovery, fantastic. But it was nuggety. The grade distribution was erratic. And it missed guidance at times and struggled with reconciliation. Investors were whiplashed, and it became a darling to a problem child overnight. So it took a lot of volatility and creation and destruction, and before it was finally sold to Newcrest for a far lower valuation than early investors had expected. This is what happens sometimes when you go it alone and you say, we want to take the next step. There could be big wins. It could be, you find out a bit more. And we're not going to get into these details of each specific case example, but it just reminds people of what Sean, the CEO of Dolly Varden and Contango would be thinking and discussing is that, listen, other people have gone it alone. Skeena, went alone as well at one point back in 2016 to 2022. And that it's been revived. It's a legend in the mining sense as well. But it hit a time of tight markets. It was huge capital needs. There's many reasons. Everyone knows, well, not everyone knows the story of Skeena, but it took Barrick to come in to help and to restructure and support and really rescue the project. And arguably without Skeena, it would have been stalled and had further problems. So it's also the rare explorer that got a second life because someone stepped in at the right time. And, the obvious one as well, we talk about it often, is Seabridge, another one that, you're a victim of your own success almost. Now, who knows? Seabridge, we've done drill sheets on it, and it says it's unlikely to be developed because the size and scale is so enormous. This is, once again, you go it alone, you keep building it out, and the resource gets bigger and bigger and bigger. You automatically assume, well, that's only got to be a good thing. But you can almost, especially if you're dealing in certain places in the world and you're trying to mine, that can become more of a problem than a good thing, because that government may not value gold as being as important as you think it is, even though it provides massive amounts of jobs and revenue and GDP and everything else. They may have an ideological vision of mining that they don't really appreciate. They don't consider gold to be that important. Certainly with Seabridge, it's a very large scale capital commitment, and that's onerous. It's a big stake to take. There's a lot of moving pieces in BC to get things done. So you almost get to a point where you think, oh, that's a huge commitment and huge project. And we all know, I mean, specifically mining and precious metals, it's volatile. Silver's 61 or 62 right this second. Could it be 50 tomorrow or the next day? It could. I don't think it is, but it could pull back significantly. So we know that this happens, and it could happen. And we expect both gold and silver to have pullbacks, but that trend line to remain the same, because the overall macro hasn't changed. You'll get people who are squeezed out and short positions getting blown out and bigger stories. And that's why it does matter right now to pay attention, especially on silver. If you're looking to enter silver right today, put a lot more effort in. Today, if you're to buy today, go listen to Chris Marcus, go talk to and get a better sense of daily trading and the volumes as a price point as to if today is the right day to be looking. But overall, we feel comfortable in our positions moving forward. Seabridge, great example. And I'm not going to go into furthermore. We'll put them up on the website. But I look at this merger as being really a strategic risk management masterstroke. And once again, that's pretty bold, because once again, shallow kind of first look, you go, it makes no sense in this market to sell at a 7% discount. And someone might say, would Elon Musk sell Tesla for a 7% discount, or would OpenAI sell? It's no. What we're dealing with, you can't apply the same logic or reason, which sounds ridiculous, to some markets, because markets are not just algorithms and not just math and science and finance. There's psychology to it. And it isn't the same scope and size. Just because something should be valued as something doesn't mean you're going to get that. And we see that all the time. But where this does become very nuanced and very interesting, and I look at it as being more hopeful, is if you were to sit back and just say, what would be the best spot if I needed to get a big whack of money in? but I still wanted to have an asymmetric gain. And even if it meant that possibility of an asymmetric gain is pulled back by 10% or 15%, but it's still big, and it means merging with someone else. Yeah, you know what? We'll take a 6% hit or discount today, because next year, our combined efforts, and once again, I don't want to say a price point or an increase because I'll get into trouble, and but you know what I'm getting at. The combined forces doesn't change the story that what Dolly Varden has is great. And I don't believe it changes the story as well that they think there's more there. It just means we're at an inflection point where we're hitting a wall of funding, and dilution becomes an issue. And we think that if we can get that funding done and dilution problem scaled properly into a combined effort, our shareholders are going to be very happy in a year. So that's where I see this, the talking points of being quite impressive and quite fun. We're going to follow this, believe me, continued. And as as a decision and a business decision, once again, people might feel, hey, I was hoping to get a big premium out of this one. Say that I just think it means that you get to still have that. That narrative hasn't changed. It's just being put into a new vehicle, a combined vehicle that allows scale. It allows a lower cost of capital than if both wanted to go it alone. It gives a combined, dramatically better access to institutional funding, to generalist funds. It opens up a huge marketplace than, once again, both of them, and certainly a producer has a better access than an exploration company ever has. So I think when we put on that kind of pull away the layers, we put on reality hat, you go, this is going to have a big outcome on some of the other players that we like so much in the region. I mean, there's lots of companies we like up there, Goliath or Sitka or you name it, that are going to be facing similar. Those have both done big raises already. But next year, what it'll look like. Now, once again, what are the drill programs going to be? That's key. And we'll get into that soon, because we will be catching up with both of those stories when they have all of their data in, and when they start announcing, this is our intention to either really grow out the resource, which is my assumption with the likes of a Goliath, is we've got so much data illustrating what we've got, but we want this now to go from X million ounces to X million ounces, which is a big game changer. But it's interesting to see, well, what other companies then on the larger production scale would be looking to say, we're interested in Canada, we're possibly nearby, we need access to replace ounces. We're losing ounces fast. And there's big contenders out there. So this has been a really interesting case study, like in real time, to watch a Contango as they can contribute a great operating team, cash flow, producing gold, near-term production visibility. They're sitting in a U.S. jurisdiction in Alaska, but Dolly Varden, multi-high grade silver, as well as gold, large exploration upside, large. It's not stopped. That's also the inference. Just because they're doing this deal doesn't mean that they're saying, oh, that's it, hands off. We think the deal is done. We've explored as much. Sometimes it happens when people put out a PA. They think, oh, that's the end of the story. No, it isn't. Like, sometimes it could be. They'll say we're finished, we're done, but often it isn't. And I mean, once again, the greatest example of that is Great Bear. Is that if you just assumed what Great Bear had, and they didn't have anything that they put like as far as official out, you go, why would you pay $30 for that? Holy smokes! Well, if you've been following Kinross along, you know why. They knew why as well. They're modeling an engineering team as well. They knew what they're getting. But that's what we have to keep in mind. We have to peel back layers and to not just look at, say, some forums and think, hey, I feel ripped off because I'm taking a discount on this. Is that, for me, I'll take a 6% discount today for all that I'm getting. Not am I getting a further kick at the can to say I'm staying solo at this case, at this position, when I have this offer on the table. This is discipline. I don't want to have to dilute to the extent that we're going to have to. I don't want to have to know that I have to do better than I did last year. I mean, they've done outstanding work, and Sean has done outstanding work there as well. And this isn't, I mean, we don't work with either of these companies, so this isn't me hooting and hollering for anything. Yeah, we own shares, yes, but and I'm not trying to convince someone that they should or shouldn't do anything regarding the companies, but just I wanted to give a perspective that isn't influenced by either company, but adds that kind of nuanced approach to go putting on a risk management hat. This makes sense, while also at some point saying the disappointment when you first see, oh God, I was hoping to see a huge premium, but that was the message today, because like all things in life, there seems to be contradictions in many things where you'd like it just to be dead simple and go, we found something, the stock went up, we get a huge premium, someone buys us, end of story. But this is far more interesting, because to be able to be picked up, to have further legs, to have further exploration, to have a further upside, with all the added bonuses you're getting regarding higher access to capital, cheaper cost of capital, to continue the story with someone who's producing, I think it's fantastic. So that's my rant today, to be able to let people know what's happening out there as far as the metals market, but more specifically, how the drill sheet has helped us identify companies that are doing fantastic, that have this type of situation, and help to explain where this looks. So our next step will be to put into the drill sheet, how will this look when they're combined? And we'll have that for you starting January 1st. But anyways, everyone, great to see you and talk with you and to share ideas with you. End of year is coming up pretty quick. I think that there could be a couple sneaky things that happen, interesting things. This came out as a bit of a surprise for me. And it was that emotional roller coaster, which made it interesting. But we're really happy with how this is looking for both parties and shareholders of both companies, because it takes care of a lot of downside risk, but while leaving exposure to upside, but in a really responsible way. And that's how you attract more institutional money as well. So should you expect like, oh, it's going to explode by 1,000% next year? No, listen, no. But is there possibility to have exceptional rates of return? Absolutely. The combined efforts sometimes don't work, but in this case, I think there's a very good signal of strength and opportunity moving into 2026. So, and a lesson, as far as I'm concerned, when I looked at this, was good work from Sean and the team over at Dolly Varden, as well as Contango. And we really look forward to seeing everything come together in 2026, how it ends up looking. Because one of the parts there that I really do think is important is that Contango would have looked at this and thought, we want access to silver, like so many people do. Where is likely to permit a silver mine? And right now, yeah, Canada might. I think there could be more coming down the pipe from the feds saying, we understand how critical for solar panels silver is. Would it be in our best interest to have a great silver deposit? Yeah, that would. And even a David Eby and a BC, it takes a bit of education, but could they be convinced? I think absolutely they could be convinced. They've been convinced of other with copper and gold. So I look at that and I think, you know what? There's so many factors at play here, which makes mining fascinating, because you have to talk politics, you have to talk finance, you have to talk about all, environment and ideological narratives and everything. It is so complex, but it is because it's currency. It really is. Just like energy, anything out of the ground, copper, gold, silver, cobalt, oil and gas, hydrogen, you name it. That's all really what all of this civilization is built on. You don't get any of your large language models or your chatbots. Nothing happens without all of these things we pull out of the ground. And that is why it's so critical and why people are paying attention and they're noticing. And that story is getting builder and builder. And there's some really great, insightful YouTube channels that they're a bit more high financy kind of backing, but they really leech onto the AI data center, more kind of center. But even they are talking about critical metals. They understand the amount of energy is astronomical that they require, that they need water as well. And this is where, copper is coming in. 2026 is going to be a very interesting copper year. Anyways, I've got 4 minutes over. It's always a pleasure, everyone. We'll see you next week. We'll do something funny maybe next week, unless something major happens as well. But I wanted to get this discussion out, and we'll have more details for our subscribers as well. Of course, we've got tons of free information on our Substack as well. We'd really love you to join and read all the free stuff. I'm on it not every day, but almost every day, putting something up and sharing ideas and talking about overall markets and trying to, our focus, unlike some others, isn't just talking about a commodity, gold or silver, or and focusing just on that. Ours is, we recognize that. We know that how important those are. We recognize the importance of commodities, but what's the best asymmetric possibility of making money? And that is a good junior with a great drill sheet score. So everyone, all the best. We'll see you next week. Have a great weekend. And we'll talk to you real soon. Bye-bye. Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system, or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book 1 of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book 1 free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday.